Hey folks, Nick Shaheen here recapping the week. Another tumultuous week, a lot of ups, a lot of downs, and it's just a byproduct of sentiment and headline trading. I insist on that. Friday, the week ended on a sour note. First of all, the week scoreboard is red across the board. Here we see the S&P, red candle, NASDAQ, smaller red candle, and the small caps also red. Out of the three, the small caps are being the most well-behaved because they are immune to the mega caps' giant moves. Like if Apple moves 4.5%, the Qs will move about 1%, 0.9 to 1%. Whereas there's not one influence on the small caps. Sometimes you get influence from a sector, but for the most part, the small caps have been much better well-behaved. So Friday scoreboard was red. Across the board, minus 1 point, let's call it 1.5. And on the Dow, 1.7 or so. But the weakness was evident. The traders are still nervous, with a reason, obviously. So come to ask why the Friday fall. If you listen to CNBC, you'll be convinced that it's the fact that we got a super strong unemployment rate of 5.1. I say they were wrong. Bonds were strong and rates plunged. So if we were fearing rate hikes, rate would not plunge. The bonds rallied, which was an indication that markets were nervous about a Monday open in China after 2 days of closure. So the Tuesday open here in the U.S., Monday the U.S. Markets are closed, so we get to watch it through binoculars from the sidelines. But markets will probably be a little nervous as to how China will open, and so far so good. This is Sunday night, and the future is slightly up, so maybe we'll get a quiet open on Tuesday. Hopefully a quiet open across the globe on Monday, and then the Tuesday open will be also quiet in the U.S. The variables in focus, I've had focus points. Apple was one of those focus points, and why? Because it is a heavyweight, and it demands respect. And as far as the breaking of this trend, I had this line ready, and we had the flash crash that brought it to 92. Lucky people who got it at 90 or 92. That's one focus point, and it is getting a bounce, but not holding the bounce. And there's still technical call, meaning there's technical drag on it. There are people who are technicians that expect much lower prices. Maybe they were right, maybe they were wrong. On valuations, if you bought it up here or up here, it did not lose 15% of its earning ability overnight. So if it drops, it'll be on technicals and actually break down in the consumer consumption, which is, I don't see that happening yet, unless we have a shoe that I don't know about. Small caps, I already talked about that. Let's put the IWM, will give us a good representation of the small caps. You can see that October correction, they're the only ones that are still above the October correction by that much. So that's one good point. The other not so good point is now this candle, this last candle right here, is touching like a, I call it a tightening range, where we go from trading this wide to like pinpoint, like a fish mouth. So a big move might be coming, upside or downside. A downside may cause us to revisit these lows maybe. An upside will bring us back to this area. This area here was tremendous resistance for a long time before we finally broke out from it. As far as the Qs, the corrections were big. Top to bottom was like 26% or so. So we moved. People who have been saying, I'm waiting for a 5 to 10% pullback, now you should be buying, I guess, unless you didn't mean what you said before. Okay, back to variables. We talked about China. We talked about Apple, small caps, China. Obviously, it's on the focus, in focus for everybody. What's going to be the next shoe to drop from there? If there's no new issue, then maybe we've seen the reaction as big as it comes from there. We need a new headline from there. A rate hike, will they, won't they? I think they will. I don't think they should. They should have a long time ago, but now that they waited, I think they need to wait another couple of months just so we can not have 1,000 cuts, so to speak, at the same time. Greece is still in focus. 9/20 are the elections. We don't know who's leading. I read, it seems like the good guys as far as the ones that are in agreement with the agreement on hand. manufactured. The moves in the prices, there's no reason we're at 37 and one day and at 49 and a couple of days later. Basically, you can count the hours later. Fundamentals have not changed that much so quickly. So this is a war, economic war between Saudi Arabia and the United States. So be careful what you do there. It does influence everything else, so be careful there. The VIX is still very high, and as far as that, I don't use it as a trading vehicle, but I do use it as a sentiment gauge, and there should be a reason why we're up here this high. This was the October correction, and look how high we are and how long we've stuck up here. So I have to pay attention to that. Why? Because if I plan to purchase insurance, everything is more expensive. So I have to pay more just because of the VIX being this high. Conversely, it's so tempting to sell risk, and I would refrain from selling new risk. I would currently manage existing risk because we don't know what's going to happen with regards to those shoes to fall. We're not in control. Fundamentals are on the sideline for now, so be careful. I remember a day not too long ago where we were chasing Dow 18,000, S&P 2100, and NASDAQ 5,000 on the same day. Well, now we're miles away, 4671, 1900 and change, and 16,000 and change. So we have moved a lot, and we can move a lot more. So be careful what you chase. Don't chase blind. I tend to favor managing current risk, buy some insurance to longs that you have. A few stocks that are in the news, you talk about Netflix. I think it's, I called it down from up here. I said if it breaks this line, it's as I said several times, it's going to see, under 40 fast, and here it is. And then I drew this box, and here it is in the box. So we saw this coming. So now it's here, here, and here. Will it hold, or will it come down to even lower levels? I have no faith in it. And if markets fear froth, it loses first. And this is perceived froth, whether it is or isn't perceived froth. Tesla's, I don't want to call it froth, but it is expensive, and everything needs to be so perfect for it to be eligible to stay up here. So just be careful. No new risk. I'm managing existing risk, and I want to open the door, prepare myself for a big whoosh down. Not that I'm calling for it, but in case it happens, I do not want to be blindsided. Nick signing out. If you have any questions, let me know.